Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 11th of June, 2018, about 2:15 p.m. Central Daylight Time. Well, as you can see, you got the dollar up a bit, even the euro. Remember, we have the FOMC meetings tomorrow, so that will be monetary importance. We've got tonight the North Korean summit. I doubt that'll affect grains one way or the other, but look at how the grains are getting smashed. That's the right way. Now, some of the big grain firms that I follow, and I get different newsletters and so on, began covering short positions today. Interesting to see if their timing will be right, but we've certainly come down a dramatic amount. The other thing I want you to pay attention to, I'm moving now to the December corn that I'm following, the SEP wheat, the Nove beans, the October sugar on this page, and you'll see that I've swung around on some of the soft commodities. I might be a few days early, but I think it's an appropriate time with the FOMC, the European Central Bank monetary policies coming out, and all that's going on to make the move at this point. When we look at the weekly area chart of closes for the week, and today's only Monday, we're down 15 cents, but more important to me is you're down $1 in this whole break that you've been going right now, and that's quite a bit of a decline. And we're now getting into the last area where some lows started showing up. So a little follow through here, important areas. Doesn't mean I'm picking a bottom. That's not what I just said. You can see how the market has just come basically straight down. And when you put the swing line on, and this is a chart without the swing line, here it is with it, you can see the different periods where you had that rally and then you thrust back down. It's called a swing line break, and in order to break this pattern under the current way that it looks, well, you'd have to rally back almost 50 cents, back over 10.28 3/4. I would assume the pattern might change over the next few days. Very important to me was the fact that we had a bearish crossover. Now, what is a bearish crossover? I've just put up Friday's action. On Friday, the 18-day average of closes closed underneath the 100-day. That's called a bearish crossover. Often, not the word always, but often, that leads to even lower prices coming forth out of the market, and you can see that happen. So it's already hit one of the downside targets. What could those targets be? Let's go back again on Friday. You actually, on Thursday of last week, you hit the lower Bollinger Band. You did it again on Friday, and now you're closed under it. So you're getting a little bit excessive, the fact that you're closing under Bollinger Bands. What's the importance of that? Well, these black dashed lines up there and down here, it's an algorithm designed to keep the market trading within it 95% of the time. Professionals often, again, not the word always, because so many people trade different ways. But the first challenge of that number, be it on the downside or the upside, could be an area where professionals step back from the market a bit. In other words, if they're long, they might get out up here. If short, you'll say, well, what makes you think that they're long going up there? That's not my point. My point is that if they're long, they'll be coming out sometimes against that and here. And if you go back on your chart and you look at how often that occurs, I think you start seeing that there's logic to that. That doesn't mean it always works. I don't know anything that works all the time. But that gives you the logic of it. So now that you've got several days in a row under it, and I don't know if the Thursday you closed under it, 994 3/4. You close literally right on that Bollinger Band. That's the way to look at it. Certainly 2 days in a row under it. That gives me, if I use a rule of thumb, that each consecutive day under takes away one of those full percentage points of the 5%, gives it a 3% chance tomorrow of the market being under that number. I always look to see what is momentum doing. And in this case, you're oversold under the lower Bollinger Band. You've hit some downside targets. Nothing says it has to bounce very hard, but it's logical that you move to the right-hand side of the band at any point here. When I come to the meal market, we did not get a bearish crossover, not even close to it. What you've had here instead is you're running the lower Bollinger Band, and if we look at how many days in a row we're underneath it, we certainly have today, which is Monday. Both numbers are under 20. 20 is the key number. Both numbers on Friday were under that, but not on Thursday. It takes 3 days in a row minimum to get an embedded reading. The importance is that's a conversion process from being oversold to locking in a trend until that red line pops back over 20. So again here, I think the market's gotten a little bit excessive. Wouldn't be surprised to see a bounce. The big question for me tomorrow is, do you get an embedded reading? You have nothing like that in soybean oil. You only have a couple of days now under. You have today under it, and if you look at Friday, you were under it there, just like the meal, not the third day. And notice how this market turned away from it today. When a market turns away and bounces like that, and you're still dropping your slow stochastic, it's interesting. Could mean even more weakness coming. We'll see how this market handles any rallies. In the corn market, you've had the embedded reading. Now, how many days? Let's take a look. Certainly today, that's Monday, both numbers under 20. If we take here, both numbers Friday, both numbers Thursday, both numbers Wednesday, not the day before. It's the fourth day in a row. So when you get that, what often happens is if you're on the Bollinger Band, the markets tend to ride it. A day under, a day over. Until that's lost, it's still a very bearish signal. In the wheat market, we have a pattern of a higher high and a lower low. We know that we've seen wheat problems in the harvest that's been going on in the southern plains. In the Black Sea, where Russia is, we've got serious problems there in terms of the weather. But other parts of the world are getting better. So it's a different story. Over the weekend, in fact, for the next 7 days in the U.S., grain weather looks pretty darn good, with the exception of cotton in Texas, and it's still dry, hot, definite problems there. Sugar's not wanting to trend. It tried to establish another downtrend on Thursday of last week with this decline. It dropped a little bit, came back and settled up on the day, and it's following through the upside. So now you're getting this type of action, just back and forth right here. Resistance up to 1300 to 1314 area, support back at 1247, and I say not a trend. In the coffee market, you've gone from the upper Bollinger Band to the lower Bollinger Band, basically, and you bounced a little bit. That's all that I can tell you about it. When I get these type of vertical declines, they're hard, because how does a trader catch it other than just trying to pick a top in the market? Very difficult. Then you come down, you don't know if you're getting short covering or what's happening, but the market wiped out the uptrend. Now, why do I say that? If you come back through here, you had the pattern of the higher lows. You had a stall at one point with the lower high, went to the 18-day average, then came up to that Bollinger Band and the 100-day average, and I so often say, if you're overbought and you're hitting that, pros tend to be coming out. Market pulled back on, this was Tuesday of last week, and you can see once the decline began, it made a run for the lower Bollinger Band. I think it just missed it by a fraction there. It doesn't matter. You're in one of these wild trade periods. In the cocoa market, my eye is fixated on this. If you take a look in the SEP cocoa, you now have a 19.27 reading, and the slope of the red line has been coming up. If it loses the embedded reading, I would not be surprised to see the price first go to the 100-day average and see if it can run to the 18. Also, if you get through tomorrow, 24.42, you lose the pattern that's been in place of lower highs, lower lows, literally since the beginning of May. So for over a month, we've had that pattern, and that's where you're running now. In the cotton market, I read an interesting story over the weekend as to how much cotton China has committed to in the U.S., and I was blown away. They have bought more cotton than they have. I forgot how many years this article is talking about, but it's enough from the U.S. for 400 million T-shirts. So something's going on. Maybe it's why we're not hearing a lot of talk between the U.S. and China. Maybe it's because President Trump's not picking on China with the Korean summit going on. I don't know. But I'm inclined to think that even all this noise with the G7, with China, it all is going to lead down the road to some type of give and take on both sides. The president's numbers are simply not correct when it comes to Canada. All you have to do is go to the figures and you will see that. Trying to get parity with so many countries. Canada, by the way, it's 1/9 its GDP the size of the U.S. You can't look for parity. We're bigger. We're going to consume more, so you're naturally going to get something. But there's nothing wrong with saying these deals need to be readjusted, and I think at the end of the day, in better grammar, it might be said that way. Whatever the case may be, I'm not the president and I'm not a politician, but I can tell you cotton's got a higher high and a lower low. That much I can see. It's overbought as can be. In the cattle market, you tell me what number the market ran to. On Friday, you made a run. You got as high as 106.22. The upper Bollinger Band was right here at 106.41. You went to it today, went through it, and now you got a reversal day. Was that enough from this break low here to say that the market has probably made a near-term peak and it's ready to pull back? Seems to be what the market is saying. The market has to get through this 103.70 area. It didn't get it today. If it does, you lose the pattern of higher highs, higher lows. Doesn't turn it bearish, just neutralizes everything. At this point, overbought. First hit of the upper Bollinger Band sent the market back down. Feeder cattle, not able to get up to that number, and all of a sudden an outside day down. You've been overbought. Now momentum's turning with the market. This market, I think, has stepped out of its trend. If you look at today's low, 145.32 took out the previous low of 145.70. A neutral market right now. In the hogs, this has been a son of a gun market to trade. It peaked again. Up here, the market got to the point of the July hogs look so much different than the August, by the way, but lower highs, lower lows, back into the downtrend. Will the market challenge the lower Bollinger Band? That's the percentage trade right now because momentum's down, bias down, and until today's high, the high of an outside day down is taken out, be careful. Now, what our firm does, and it's Linn Associates research, we write on all these markets, like in the grain markets. Right now is crucial time. You need weather. You need to get the emergence of the crops, not too much heat, everything right. You're getting it. Tonight we'll be writing about how the crop conditions come out. Then we write about the crush spreads that are going, the amount of data that's coming out. I'm telling you already, we know of some of the key players that we think they are started covering shorts today. It doesn't mean they're right, but we write about it. We give you ideas as to what's going on. And you get to pick the different articles you might want. Yes, this is for our clientele, but you're invited to be a client of ours in one of a number of ways. So how do you get a free trial if you haven't had one? Call us. You can go to our website. You'll see a carousel of free offers. Go through there. Up here, if you click on YouTube, you will see this icon. That'll take you there. And underneath us, it says, click here for Ira's free information. Do so. We'll put all this in your hands. I'm Ira Epstein. You have a good day, and I'll see you in my next videos. And they'll be right after this one. Take care.